Hello, welcome to channel. Today we are going to start with the same thing like which in the last class we have studied till the process. Like I told you what is the process of the credit analysis. Same here we are going to discuss it with this topic of the credit analysis. So let's get started. Okay, so I told you in the last class the process of credit analysis is quite easy. That it starts from the application, the loan application, then the evaluation, analysis, and the last one is approval or rejection. Okay, so the first step, the information collection. Here we used to collect the information regarding the the applicant's credit history. Specifically, you can say the lender is interested in the past repayment records. Like if I am the lender, then definitely I'll think about his or to whom I'm giving the money. I'll think about his or her the history, the payment history, the past payment record of the customer, as well as I'll check the financial solvency, like whether he or she will be able to pay back the money, as well as their transaction records with the bank, like the records of their transaction, the debit and credit, how much amount they are taking, they are debiting, they're crediting. It's not like they have a lot of loan, so these type of things should not be there. Okay, so these type of things is, you can say, comes under the information collection. The lender also collects the information about the purpose of the loan. Okay, they used to think, like we have heard in the when I told you about the character, the seven C's of credit, right? So in that also I taught you that they used to see the conditions of the loan. Same here, they used to collect the information related to the lender. Like lender used to collect the information of the borrower. Okay, so the lender is the interested in knowing if the project is to be funded is viable, like the project which for which he or she is taking the amount is viable and it potential to generate the sufficient cash flow, like there would be profit or is there any kind of a loss or any risk, so such that. So bank also collect the information about the collateral of the loan, okay, which act as a security of the loan. I already taught you this, and also in 7C the collateral act as a security for the loan, okay, in case of the default of the borrower, okay, on its debt obligation. So usually lender prefer getting the loan repaid from the proceeds of the project, okay, and use the security as a fallback in the event of borrower's default. So if this case happens, let's suppose if someone has taken a huge amount from me, I'm a lender and I gave someone, I would say 1 crore. So now I will ask for a security, right? I cannot give anyone like this. I'll take some interest also, interest on the basis of their past records. I'll check their credit history. So I'll also take the collateral, which is also very important. So I used to collect the information about their collateral also. Okay. The second step is very easy. You can say the second step is almost be related to the first one. After collection, we'll analyze all the things. Like we have collected all the things, now we have it is in front of us. Now we will analyze it. Okay, we'll analyze the various financial institute, like financial statements. Okay, the financial statements I told you in the last class also. The income statement, balance sheets, cash flow statements. These all the these all the details, okay, are used to assess the financial ability of the borrower. Okay, and the bank also consider the experience and the qualification of borrower in the project to determine the competence. Okay, like whether he or she will be able to complete the projects or not. Like we have seen, I can give you a real life example also. Like we have seen many times, like there are many startups. Okay, those who are not able to grow just because of their past experience, because they do not have that much knowledge which is required for the project. Okay, so same here, the one who has good experience, the one who is old one, he is having good knowledge about it. If he or she is taking the loan, then definitely there would be some fruitful result. Okay, another aspect that a lender considers is the effectiveness of the project, like whether it would be helpful. Let's suppose if someone is deciding to open a shop of Chinese product, so what will happen? Or polythene bag, we all know polythene bag is going to they are going to close it, they are like going to avoid it. People are not using nowadays, right? So everybody wants to have the environment friendly products. So same here, there should be, I would say, the product should also be good. It should not be like them close in the some upcoming years in the future. Okay, so on the downside, if the project is facing stiff competition, Okay, every time it's not like they will be in the boom or every time in the good condition. So if project is facing stiff competition from the other entities or is on decline, the bank may be reluctant to extend the credit due to high probability of incurring costs. I already mentioned all these things. There is a high probability, so they used to check all these things. They like the competition, like the product which they are selling or which they will be offering to the to the public, whether it is necessary, whether it is useful for them or not, whether it is environment friendly or not. So these all things comes under this information analysis. After collecting, we used to analyze the same. And the last one is approval or rejection. So on the basis of the collection and analysis, we decides it, like whether we have to approve the loan or whether we have to reject the loan. Okay, so this is the last step in which we decide, or you can say decision making stage. After obtaining and analyzing the appropriate financial data from the borrower, lender make a decision. And if credit analyst assigned to the specific borrower is convinced that the assessed level of risk is acceptable, okay, then the lender will not face any challenge in servicing the credit. Okay. However, it happens that the credit analyst find that the borrower level of risk is too high for the lender. So what they do is they are required to write a report to the credit committee detailing the find the borrower's credit worthiness. Okay, like I told you about the credit rating also, right? That the S&P Global, Standard and Poor Global, or Moody's, or CRISIL, they used to give the ratings. Okay. And now the next we have is process and documentation of lending. So if I talk about the process, and I can say the documentation, because after giving approval, now the next step is of documentation only. So this process involves the application, investigation, evaluation, and decision documentation. Okay, administration and collection. Okay. So essential steps of loan for documentation procedure. Loan documentation is one of the vital area of the credit portfolio of a bank, right? Because after approving, we have to take some documents also, right? Same here, that purpose of taking documents to fix the terms of condition between the banker, okay, and the borrower. To identify the borrower, to identify the securities and the count period of limitations, all these things are to be taken care before giving the loan. So the first step starts from the selection of correct set of documents. Documents should be in correct set, like mean for individuals. Borrower cannot be used for the company or partnership borrower. Like you can say that documentation varies depending upon the nature of the facility, but may not be used for a term loan facility. Okay, as the banker have pre-printed form of documents, it should be ensured that the correct set of documents should be there and they should be relevant. Stamping, okay, according to Indian Stamp Act, that contains the provision regarding the time of stamping for an instrument, okay, executed in India and out of India. And the next one is facility before execution. So this is also the next third step, I would say, that we have to go for the facility before the execution. Like we have to check all the data, all the documents before its execution. Execution, the next step, the execution one. After filling, the next step is the documentation. The procedure is execution of signing the documents, and it should be ensured the signature in the documents tallies with the signature as an appearing. So you can say in the simple language that everything should get matched. Okay, everything, there should be a good match between all the things. Legal formalities everywhere. It's quite known that there would be some legal formalities. Keeping documents alive. Next, renewal of documents, okay, up to the date document should be there. And revival of the time period debts. So like time period debts are the debts, you can say, like in which the money, okay, like debts, we with this word only we can understand money, right? If we are talking about this time period debt, then you can say it can no longer be recovered through the court action also. Okay, if creditor takes two loan, okay, or you can say to take two action to recover a debt becomes statute barred, means it can no longer be recovered. You can say them time barred debts. Okay, next is safekeeping and preservation of documents. So it's the next step, you can say the last one. This is all are the process of documentation. So it's like, you can say in a simple language, you can simply understand that we will take the selection, we'll do the correct set of documents, we'll take the documents which are required, we'll do the stamping, we'll do the facility before execution, that is, we'll arrange all the things which is required, then execution. The next one is the legal formalities, keep the documents alive, renewal, and the revival. If possible, then we'll do the revival of the time period tax. Okay, so So the next step which we have is loan pricing, a key driver of success. Pricing loan. Okay, loan pricing is you can say the next topic of this same, okay, of this lesson. Okay, loan pricing. Let me just show you the first just a second, let me show you this. So as I already mentioned that in our first unit we'll cover all these things. So we have completed the financial credit meaning and objectives, credit risk, credit analysis, 7 C's, the process, documentation. Till here we have completed the documentation. The next step we have is of loan pricing and profitability analysis. And the last one will be of types of credit facilities. Like, there are various type of facilities by which we can get the credit. We can get the credit through cash credit or bank overdraft, demand loan, bill finance. Okay, so these are the types. We'll get more information about them as well. So let's come back first of all on the same. We'll go for this loan pricing actually, first of all. Okay, so loan pricing, a key driver of success. Financial institutions that structure and optimize the pricing for loans are able to make sure that they are adequately compensated for the risk that they are taking. Okay, they should be adequated, or you can say the compensated. Let's suppose if they are taking a lot of risk, then they should get something, in profit as well. As a profit, they should get something. So instead of pricing loan based on the gut feeling or request, like we'll see whatever will happen in the market. No, there should be some, you can say some return should be there on that particular amount which they are giving for like as a risk. If they are giving, then there should be some profit as well. So what is the benefit of loan pricing? So the first is this approach can help you to ensure the best loan. Okay, the best loan in the, you can say, in all over the things, like they'll provide you the best loan and terms are matched to the borrower. Okay, whatever the borrower wants and whatever the lender wants to give, there should be a good matching, and makes the sale and keep the customer. Loan pricing models are also called as loan profitability models. Okay, can allow bank or credit union to set prices based on the institution goals, to including the goals related to profitability target. As I already mentioned, if someone is taking a risk, then he or she should get something, should be compensated for that risk. And the one overall benefit of effective loan pricing is that one of the many ways you can say that it is important, because it provides the institution with the ability and freedom to deploy capital for developing new products. Okay, like let's suppose borrower is demanding something, with some interest. He wants to take the loan, it's this interest. So there are many lenders, whoever condition is matching with the terms and condition of the borrower, can meet with each other and can do the business, or the thing which they are deciding, they both can do. The next we have is consideration. What are the things we have to consider? The first is cost of the fund which we are taking, the cost, the operating cost, the day-to-day cost, that is operating cost, should be considered while going for the loan pricing. The risk premium for a default price is also most important, and the profit margin of that capital. Okay, I already told you the compensated value of that, the capital. Okay, so loan pricing means determining the interest rate for granting the loan to creditor, be it individual or business one. It is one of the most important, however, difficult task in lending fund to business firm and other customers, because it's always very difficult to exactly know what actual loan risk a particular loan application is. So it's not sure, like they're not sure about it, what type of risk or how much this risk which they will face in the future. Okay, so it's very difficult to price the loan. Okay, like to decide the interest rate, how they get the interest, like how they get the profit on the loan which they have given through interest rate. Like if they wanted to charge 5%, 7%, 10%, that is the compensation that they will get in against of their risk they have taken. So there are various methods also for the loan pricing, you can say. Okay, interest expense, the component, these are the components, you can say, the interest expense, the administrative cost of capital. Okay, so we have this formula of pricing. How can we do the pricing of loan? The interest rate, the base rate plus risk premium. I've already told you the base rate, the price of that. Let's suppose if there is a base rate, a standard rate, that one base and plus risk. Whatever the risk a person is taking, will charge it as a risk premium. That is equals to the price, the interest of the loan. loan price is not an exact science, you can say. It's not an exact science that there should be, I can give you a surety, or I can say, I can, there is a particular formula by which only I can calculate. No, not like that. It depends upon the base price, the risk. This is important. Okay. So these are some of the pricing methods. You can say loan pricing method, fixed rate, like there is some fixed percent that I'll charge 5%. This is fixed rate. Variable, that it's depend upon the risk, you can say. So based on the minimum rate from time to time, depending on the demand and supply of the fund. Prime rate, you can say it's a low rate which is offered to, highly reputed, or I can say a good customer that who has good record with the bank. Next is rate for general customer, like those who are unknown to the bank. There are many customers, so we call them the rate, which is for the general customers. And the caps and floor, you can say, for extended a variable rates limit placed to an extent to which rate may vary, or you can say that it can vary according to the demand and supply. Prime rate is also their rate on another basis. These all are quite similar. Okay. Now, determining the loan price without interest. Okay. How can we determine the price of loan without interest? So, from here, like the models are there. These models will cover in the next class. Okay. So, till then, bye bye. I hope you like my video. If you like it, then please do press like button and do comment if you face any issue with that. Okay. Thank you.